We welcome you to the Duty Drawback webinar to give you an overview of what Duty Drawback is and how it can impact your company. My name is Troy Larkin. I'm a custom house broker with Cedar Brokerage Company, or CBC. We're located north of Salt Lake City, Utah. We'll help you better understand what Drawback is through this program and how it applies to what you're doing. Though we're a licensed custom house broker, we have the authority to perform all of the functions and duties that brokers have. We also have exclusive use of only doing the Drawback program. This specialized expertise, software, knowledge, and understanding, and exclusively dealing with Drawback assists our clients in better maximizing their return for duty drawback as well. So what is duty drawback? Duty drawback is a refund of import duties paid on goods that are brought into the United States and subsequently exported outside the United States as well. That refund, there's different categories of types of drawback refunds that are associated with that as well. We'll talk about a few of them. Drawback goes unclaimed on an annual basis and expressed of about $2 billion a year. At $2 billion a year, the question is, what portion of that $2 billion can come back to my company? As we look at the Fortune 500 companies and the top 50 of the Fortune 500 companies, far left-hand side, it said averages the return for them is 7.11%. Slightly to the right, they have $0 through $30 million, and along the bottom, we have a drawback return. So if we make an assumption that our drawback return is $250,000, that Fortune 500 company, or your company, would have to generate $3.5 million in sales to drop $250,000 to the bottom line. That means for every dollar that hits the bottom line on a refund for drawback, the company would have to generate 14 times that amount in sales in order to do the same thing. CFOs and CEOs love the drawback program. For those that qualify, their concern typically is getting a program that is not only certified, one that's qualified, and one that will maximize their return as well. Several different types of drawback that are out there. Three of the most common would include: one, unused merchandise. That would be goods that came in the United States in the same condition they're exported outside the U.S. Second would be rejected merchandise. Rejected merchandise is goods coming in the United States, perhaps doesn't conform to samples or specs, maybe it was even shipped without consent, or it's defective at the time it hits the United States. Manufacturing is the last form, most popular form of drawback, and that's when goods come in the United States and it's created in a different article with a very distinctive character, name, and use. There are two types of different drawback programs, and one I'm calling a light version. That means prior to the exportation of the good, you can contact Customs on a Form 7553 and request they either inspect or waive their inspection. Upon one or the other, you then can subsequently export the goods and return a claim to Customs and claim drawback. Our forte and our expertise is dealing with a more complex program, which is a full-blown drawback program. In that drawback program, we provide a privilege application that requests a number of privileges for our clients. 5 of the typical ones we include would be: one, a one-time waiver of prior notice that allows us to go statutorily 36 months retroactively from the last date of exports. In addition to that, on future exports, we'll request a waiver of prior notice that you can import and export on a regular basis without approaching Customs and indicating to them you are exporting the goods and requesting that inspection. You can eliminate that good. For more rapid refunds, we apply for accelerated drawback privileges. Those privileges allow refund payment within 2 to 3 months instead of 12 to 18. For those programs we've implemented have been going for quite some time, we get refunds on sometimes, on some occasions, as early as 2 weeks after we file the claim as well. For those substitution drawbacks we need to deal with, we request determination of commercial interchangeability. And for those, we're actually going to provide a different type of accounting method other than what the company's been using for the last 12 months. We'll request a waiver of that as well. Statute of limitations associated with the drawback program for unused would be 3 years from the date of import to the date of export, 3 years from the date of export to the date of filing a claim. In manufacturing direct ID, it's 5 years from the date of import to the date of export, 3 years from the date of export to the date of filing a claim. And with manufacturing substitution, the exact same statute of limitations apply, with one exception: is that within the 3-year time period of the good hitting the United States, it needs to be manufactured into the final product as well. Well, Duty Drawback is a wonderful program. It's a program for those companies that qualify, has significant impact of dollars that drop directly to their bottom line. As Customs House broker and as drawback specialist, we have the capability, the knowledge, and the understanding of dealing with Customs and making sure that our clients are within compliance of their Duty Drawback program. We've included with this seminar a link to a questionnaire. And we would request that you go through and fill that questionnaire out. With that questionnaire, you provide it to us on a no cost and a non-disclosure basis. We can get back with you, recommend on a high level what type of drawback program is available to you, and estimate the amount of duties associated with that as well. We appreciate you taking just a few minutes with us on duty drawback. We hope that better helps you understand the drawback program and how it impacts your company. Thank you.